Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for August the 1st, 2019, and what a day it is. We have a lot to cover tonight, so we'll jump right into it with a fallout from the Fed update. In the equity markets, it might not look like a lot, given that the main indices were down 1% across the board, and the Russell was down 1.6%, but that underscores something major. That the market did a trend to the upside. The S&P rallied about 30 points and then fell roughly 60 points. The Nasdaq rallied over 100 points, peaked at the 8,000 index level, and then went on to fall 200 points. Of course, the Dow Mini Futures broke a descending triangle pattern and are now under the 27,000 level. Similarly, the Russell peaked at the 1600 level. What a grand short that was. That was yesterday into the Fed, and now are down 50 points lower, which doesn't sound like a whole lot, but that Russell is only 1,550 points, given that the S&P 300, Nasdaq 8,000, and so on. That 50-point swing was 1.6%. So the biggest volatility, once again, was the Russell. All indices down. But the biggest mover today was crude oil. We'll actually take a look at our intermarket perspective. It wasn't just crude that was down. Again, perspective. This looks like a huge swing. It's not. It is, of course, for us on the intraday frame, but it's only a percent. Even though this doesn't look like it, this is 7% in crude oil. Gold was up over 1% after breaking a little flag, breaking into a bear trap, breakdown, false break of a trend line, all the way up just to the new highs. But we'll focus on two markets today amongst all the things we can talk about, because the bond market surged above 127. That is an extraordinarily large move for the bond market to make on an intraday basis, coupled with crude oil to the downside, stocks to the downside, and gold to the downside. Let's take a look at those briefly. Starting with the S&P futures. We are most likely going into a scenario like September into October 2018 and into April and May 2019. That's been the focus of a few videos recently, and of course in Corey's Corner, which is a short sell, or at least get the positions on, get the hedges on, get the long volatility positions into these levels, because right now looks similar to these prior peaks in the market. Not calling for a bear market, just calling for a steeper pullback. And as of yesterday and today, that's happening. So have your positions on if you haven't already. The market is into 2950. That is, of course, a key pivot. And simply stated, if this market's under 2950, we probably rapidly see it 50 points lower to the 2900 level, probably on down to 2811. I enjoy trading long VIX futures or long volatility, I guess technically long volatility positions. That means buying puts or buying put spreads, or just buying VIX futures or buying VIX option products with a call, or doing any type of intraday positions on volatility. The better play is to get long volatility calls and whatnot to hold for bounces. If volatility creeps lower, you'll be okay. What you're waiting for are these big spikes. So volatility has a little bit of an upward spike to it. So getting long into support levels over the last year or so, that's been roughly 11.5, mainly 12 index level. So that is occurring, that is spiking. So again, that's at least at this point in motion, but this will happen again and again and again in terms of volatility. Low volatility leads to high volatility. And of course, the high takes us back down to low. Sometimes we get extremely high volatility in a prior time frame from extreme low volatility. So that 2018 spike came from a deeply compressed VIX. 2018 level came from a deeply compressed VIX, and so on and so forth. Now, as promised, let's just take a look at other markets. So crude is not that impressive, at least right now. That's a 7% move. That's impressive. But on the chart, it might not look like that much, but it is. So 55 is your critical pivot, a rejection just shy of 60. And the other level to watch right now is 50. We are, of course, moving on the backs of tariff news, of a 10% tariff on Chinese goods starting September 1st, at least in terms of policy. We will see how that plays out in the month of August, but markets move in anticipation of news, and that is a big news event. That's why the indices were down. That's why, in part, crude was down, because that could portend, or at least set in motion, possible global slowdown, or at least weakening economic conditions. That's what the Fed talked about when they lowered rates. Part of their concern of the future was trade policy. Given the next session, the next headline we hear after a rate cut because of tariff policy is a tariff policy headline. So it is no surprise, potentially, that the market sold and reacted as they did. Again, gold was into resistance and traded back down. Here is the big thing to watch for this week and beyond. So ZN, I prefer ZN. That is the 10-year Treasury note. And that is a long bond. This is a futures market. So these higher highs, higher lows, higher highs, higher lows, higher highs, rising moving averages, bull or green volume expanding, all of this indicates that the bond market, is in an uptrend. And if that's the case, bond prices probably keep going up. So we had a buy opportunity for aggressive traders into these pullback spots. That's how we get positions on into trending markets to manage risk on pullbacks, or we also call them retracements. You might also call them bull flags. Either way, the goal is to establish long positions, however that might be done, with options with TLT, IEF, intraday tactics, etc., on pullbacks to rising trend lines, or my favorite, moving averages. So that is ZN, that is now making new 2019 highs. We'll take a look at a broader perspective in a moment. ZB is your 30-year bond that is also at new highs. But the kicker is going to be Treasury yields. And we continue to focus on Treasury yields because that is a sign of economic strength, or what companies are having to pay to do refinancing, or homeowners are refinancing, or corporate expansion, or just paying off debt. Low interest rates are good for the economy because they lower borrowing costs, and therefore more money goes to the products. Anything you need a loan for, it's better if loan prices are lower, and that's tied to yields. So this is a good thing, but remember, the Fed is in a policy of lowering interest rates. The bond yield, this is TNX, we see this as a percent. That's 3%, that's 2%, and we have been watching this 2% level. Don and the whole team here in TheoTrade are watching that level extremely closely. And again, downtrends have greater odds to keep going down. And this focal point is a psychological level, 2%. Bond yields, at least the 10-year yield, is now under 2%. What's the bigger picture? The bigger picture on Treasury yields is that it's been lower. The lowest low recently is 2016, and that was about 1.4%. I've been noting in videos and commentaries, if 2% fails, in other words, if the buyers don't rally the yield, or if yield doesn't rise off of this 2% level, you probably do see an extended move down, and that may be starting today. That will, of course, beyond the scope of this video, but will play into financials, and Don's been discussing this with us as well, that the financial ETF, XLF, had a sell signal. There are positions bearish into it at 2850 or before that, and this was one of the weakest, actually the weakest sector ETF, right there with energy, XLE, which is, of course, in part moved with crude oil. Taking that aside, XLF financials, that's your weakest sector by far today. And that plays into 2750. That was a stellar drop that has even lower potentially to fall. 2650, so on and so forth. And of course, we can look at individual names. Citigroup had a sell swing into 72 from prior videos. That is achieving its initial target, the midpoint target, 68 per share. We can look at Goldman Sachs and multiple names. Maybe next time I'll do an update on financials, but for this video and the seriousness of the market movement today, I thought it would be helpful to look at the broader perspective in commodities, discuss the equity markets, and then, of course, you can trade that down in individual products, individual stocks, ETFs, that includes TLT, IEF, or others, and of course, financials themselves. Lower rates don't help the financials, and we're seeing that reality come into play today. As always, be safe and careful, especially in this environment. Take care. This is Corey Rosenblum with your Theo Nightly Video for August 1st, 2019.